Dr. Reddy's stock slumping in today's trading session. The top Nifty loser after its fourth quarter numbers missed street expectations. Margins contract sequentially while US and Russia businesses disappoint. Managements tell CNBC-TV18 that the margin was higher by expenses and they expect the India business to grow in double digits going ahead.
Voltas loses in trade on the back of a weak showing in the fourth quarter. The EBITDA and the margins miss estimates while cooling products market share declines as well. The stock is down 7%.
IGL gains after the fourth quarter numbers meet expectations. Revenue rises 1.2% sequentially while volume is at a multi-quarter high.
Pidilite as well is down in trade as EBITDA misses estimates due to higher branding expenses. Brokerage, Citi issues a sell call with a target price of 2,200 rupees a share.
REC recovers from a two-day losing streak after the management clarifies that the RBI's draft guidelines on project financing will not have any adverse impact on the company. PFC also surges post REC's clarification.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. Well, the markets have come in for selling yet again, Mangalam. We saw a bit of an intraday bounce on the Nifty. The 22,200 odd market seems like a favorable risk reward around those levels. So we had a bounce of close to around 60 points from the lows of the day. But yet again, the selling that's crept in and the Nifty bank is now headed to that 47,800, which is another crucial mark. What's seen some selling? Asian Paints. That's the biggest loser, I think, in the last half hour or so. It was down 1%, now it's down 2.5%. Shriram Finance as well has taken a big U-turn out there. And Kotak Mahindra Bank, it was trying to stage a bit of a bounce back. That's moved from the green into the red terrain. And we have the Nifty Bank that plays out weekly expiry. So that's going to be the big swing factor. For the time being, we're back at the low point of the day.
We are, Nigel, indeed. And what we'll watch out for in Asian Paints in particular reports its numbers tomorrow. The street is working with, high single-digit to low double-digit sort of volumes. And that would be lower than what Kansai reported as well. And it's counterintuitive the way both Asian Paints and Pidilites are falling in today's trading session because overnight we did see crude prices come off. And at the same time, things are looking better in the consumption space itself. So let's see how that pans out. As of now, the mid-cap index is mildly outperforming the frontline indices. With that, we have slightly more stocks advancing than the number of stocks which are declining, though that index too is off highs and mildly in the red as we speak. But among the stocks that we're focusing on today, United Breweries is in focus on the back of their fourth quarter numbers. In fact, I spoke with Vivek Gupta, who's the MD and CEO of the company, to figure out, what sort of demand environment is the company facing right now and what kind of volume growth can they post in this year along with margins.
As you mentioned, we had 11% volume growth, 21% net sales growth. Our premium volume grew 21%. And we believe we also grew market share all over India. So we are very pleased with the result. I think there's a lot of opportunity in the beer category. Our focus is on consistently building our capabilities and our growth plans for not only for this quarter or next quarter, it is for the years to come. So we feel there is large potential. Will the 11% or 21% will continue? I think it will be difficult to say because there are disruptions this quarter, specifically due to elections. As you know, in many places you have dry days and there are restrictions. But I feel that our momentum is there. For last 3 quarters, we are growing 7%, 8%, and 11% respectively. So we would like to continue the momentum.
All right. Election disruption aside, let's talk about a couple of factors. You said, one, you gained market share across the country. Secondly, momentum is there. So can you break that up for us? What does your market share currently stand at? What's your target for the next year? And as far as the momentum is concerned, what rate is the industry likely to grow at in the first quarter? And for the year, what's your target?
Yeah, so when I say momentum is on, last 3 quarters we have grown 7%, 8% and 11% on volume. And last 2 quarters we have actually grown 14% and 21% on value. So there is definitely a momentum on there. Our market share is close to 50%. In fact, our data suggests we actually gained almost 130 basis points of market share quarter on quarter this quarter. Our focus at UB is to actually drive category growth. We are less worried about growing market share, but actually more about growing market. So the focus is that the category should grow at least a high single digit, and that means we should slightly grow higher than the category to maintain the market leadership.
All right, high single digit is the category, then probably you would be a little over double digits. So that's what the street would read from what you're saying, Vivek. But, with all of this, what we need to know about is the operational performance as well. Barley prices have now come off. There is some stability expected. You are looking to increase your proportion of returned bottles as well. All of that so far is not reflecting in your gross margins or EBITDA as much as the street would have liked to. Would you like to give us some guidance for gross margins and EBITDA margins for the next year?
Yeah, I think in this quarter, we actually grew our gross margins 300 basis point versus the same quarter a year ago. We are actually investing in the category growth in our business. This quarter was full of innovations. We launched Queenfisher. We launched, our draft beer in Heineken. We expanded our Ultra Max offering in other states. So we also launched London Pilsner in Karnataka. So we are actually investing in innovation. And as you know that when you invest in innovation, you have to actually put more new bottles. At the same time, our advertising and promotion spends to drive the category growth has also increased. So we are actually investing in our business. We are building long-term capabilities. We will see sequential improvement in margins, but we will continue to invest back to actually drive category growth and actually, build our market share as well as.
So if I could ask you specifically, for three numbers then. One, what would be the amount that you would spend on ads and, promotion? Roughly, it's been around 5%. Secondly, what would be the targeted proportion of returned bottles in your overall scheme of things? And thirdly, when you say sequential improvement in margins, when do we see you go back to that double-digit margin?
See, I think, as you know, that's advertising and promotions, it's your competitive plan based on the innovation. But I can only say that we will be sufficiently investing to ensure that our products reach in the outlets which sell, and there is an awareness of the product to do that. On the return bottle, we actually expect improvements in the next quarter. We have made some operational changes. We expect this number to be closer to, at least the new bottle immersion should be less than 30% in our business. And on the sequential margin, as I said, that this, we are looking at, margin improvement quarter on quarter versus a year ago, but we'll continue to invest in the business. Our focus is on driving top line growth, revenue growth, and getting our business structurally right. What I mean by that is launching innovation, getting a portfolio right, making sure we're making capital investment in our breweries so that we have a long-term, proposition. So those are the things we are focusing on. It's very difficult to give an outlook, but I would say we want to make sequential progress.
All right, sequential progress is something that the street would keep an eye out on then. Let's talk about the portfolio itself. The last time you said, the premium category is about 20% of the overall market. What's your portfolio mix like right now? And with all these new innovations that you're bringing about, what is it likely to be going forward?
See, our premium business is still less than 20% of our portfolio. But as I said, that this quarter we grew 21% volume growth, and we definitely grew market share in the premium portfolio. We will continue to expand. We have the opportunity to expand our international brands like Heineken Silver in the country. At the same time, we have the best domestic premium brands like Ultra Max, Kingfisher Premium. We are also expanding a portfolio by state. This business is state-by-state business. So when we talk portfolio expansion, it is not only about launching new brands in the country, it is also about exposing brands which are already there in some other states, but not in a particular state. So for example, in Odisha, we actually started having our cans on Ultra and Ultra Max this year. We launched, as I mentioned, London Pilsner in case of Karnataka. So we will continue to fill the gaps in the portfolio in various states, but also start bringing new brands. So we expect our premium business to continue to perform strongly, like what happened this quarter.
So could you give us a sense, currently, what proportion of your revenue comes in from premium? Where does that go given its pace of growth? And Heineken, you spoke about, contributes sub 4% of your revenue, but you've actually added a lot more in terms of offerings here. So where does that number go by the end of this year?
See, on Heineken, we are actually planning to expand our manufacturing footprint. We already have a manufacturing facility in Karnataka, which hopefully after elections, we may get the approval to start our production. Once we get the approval, then we will be able to serve consumers in Karnataka and more of south of India with Heineken as well. Our goal is to continue drive category growth, and we expect our premium share, which is currently less than 20, to actually start hitting, more close to 25 in next 2 to 3 years.
You were hoping for some announcement to come by in Maharashtra in the first quarter of FY25. Assuming that things are silent till the elections, perhaps thereafter, could you hear something?
We continue to engage with the government, and we know the association continues to engage with the government. As you mentioned, we are waiting for elections to come, but we got very, very positive engagement with the government. But again, the real action is when they're going to review it. They put a committee to review the taxation, and I'm very optimistic that probably post-elections, we may see some progress from the government.
Let me put you on the spot here before we let you go, Vivek. For the next year, if we had to divide it into two halves, can the first half be high single digit in terms of volume growth, second half low teens, overall taking your volume growth to about 10% for the year, and margins at some point during the year will hit the double digit mark?
Look, I think, as I said, we are aiming for high single digit growth, but we need to continuously build the category and build the fundamentals on this, and we have to sequentially improve our margins. So I would say that it's a long-term game. It's not a short-term quarter-on-quarter game. We will continue to invest in our brands, our people, our organization, our breweries, and whatever is needed, because this is a very capital-intensive business. So the choices we make on this business are not to just deliver short-term results, but it is also to deliver results for 27, 28, 29, because the investment we make today, they will start giving fruits after 2 to 3 years. So I can only say that I feel that there is a lot of potential in the category. I feel we are on the right track. We are very happy with the progress. Our board yesterday announced dividend for our shareholders of ₹10, which is an increase versus last year. So we will like to continue to make this solid progress.
All right, that's the management of United Breweries. In the past quarter, volume growth was good. Margins were a bit of a disappointment. Going ahead, they're saying that they'll continue to outgrow the industry, as well as they expect to see some kind of margin improvement. Stock down 2% for now. For the time being, we'll slip into a short break. When we return, we'll be joined by the management of TBO Tech to discuss the plans with regard to the IPO. You don't want to miss this.
Welcome back. You're watching us here on Chartbusters, the online B2B travel distribution platform. TBO Tech's near 1,500 crore IPO opens today for subscription. 400 crores is the fresh issue. We have Ankush and Gaurav Bhatnagar, who are both co-founders of the company, joining in to discuss their post-listing strategy. Thanks a lot, gentlemen, for joining in, and welcome to the capital markets. 400 crores is the fresh issue that you guys are raising. Just a two-part question here. One is, what do you do with this money? You have acquisition plans here. What have you zeroed in on? And secondly, of the historical data that you've given us, it includes a couple of COVID years as well. So what is a steady state growth that we can expect for a company like yours?
So good morning, and thank you for inviting us. So I'll pick up the first question. I think the raise, what we are doing in primary is about 400 crores. And I think the three main objectives, what we want to put the money behind. One is obviously technology development, because we are a platform. And it's very, very important for us to keep innovating, and doing R&D to ensure that, we keep competition away. And, there's moats in the business, which is obviously created by technology. Second would be, for increasing our buyer base globally and also our supply, because I think that's something which is very, very important, because in a platform business, that's where the network effects kick in. And third is acquisitions, because acquisitions has been a theme for us. We have had 4 acquisitions in the past, 2 in India, 2 overseas. Going forward, absolutely, there are many opportunities which keep coming along. And we will look at them very seriously, both in India as well as in the global markets.
All right, got that. So that's about the use of the proceeds. I'm looking at a revenue trajectory, and you'll effectively have doubled your revenues, if I look at it from 2020 till 2024. Given that now you're going to be getting some money as well, focusing on growing at a faster clip, doubling of revenues every 3 years, do you think that's a possibility?
See, look, I think let's step back and look at how large the market is. And we operate in the global outbound travel space, right? So that space is very large. The global travel spend only on outbound travel is nearly $2 trillion. 1.5 billion overseas trips happened in 2019. Similar numbers this year.
Yeah.
So if you look at that number, right, more than India's population just travels overseas, right? So out of a $2 trillion spend, we are sitting at about 23,000 crores, so about $3 billion out of that spend, right? So the room to growth is immense. right? Like Ankush talked about network effects in our business, hopefully they kick in, and as we add more buyers and suppliers on the platform, our hope is that the transaction and the GMV grows faster.
Okay.
So let's, back calculate that. Revenues doubling in 4 years would give you close to around 20% CAGR. Maybe with all that you have, doubles in 3 years, it's 24%. So could we expect revenues to grow between 20 to 25% on a sustainable, stable basis?
So obviously we can't, project or forecast, but I can tell you how we think about growth. And from our perspective, the space that we operate in, historically, this space itself has grown 6-7% on a very large base. So, right, okay. So the 1.5 billion, if you add 6%, 7% on top of it, 100 million new trips will get added on top of it. Our business rides on that global, demand, right? So we are not India, just India centric, right? We operate across more than 100 countries.
Yeah.
So if we look at what we've been doing in the past, there is room to continue to do that in the future as well. It's not that the headroom for growth is over or that we'll start hitting market limitations, right? That's the way we think of it. Obviously, what the actual numbers are going to be, only time can tell.
And maybe we'll push you on that post-listing. But
Please
for
do.
the time being, 30% of your money comes in from MENA region, right?
Yes.
Any impact of this Israel-Iran conflict that we've seen on the business?
So we did see some short-term effect, when the war just started. But I think after 3 months, I think things have settled down. Numbers are coming back, and I think travel is something which has short memory, right? And we have experienced this in the past many times. People move on, and I think travel is something which is today just not a luxury anymore. I think everybody wants to live life, make memories. So I think we are almost back at the same numbers.
I don't think it's optional any longer. I think it's compulsory.
So let's talk about a couple of risks in your business. What you typically do is take the supply from airlines and hotels and give it to the travel agents. So it's B2B travel platform. Big risk is that all these OTAs or all these brokers can bypass you and go to the suppliers directly. That's point number one. The second risk is if someone comes in a business like yours, your take rates go down. So give us an outlook on how you mitigate this risk. And secondly, the outlook on take rates and mix, how much comes in from airlines, how much comes in from hotels going forward.
So I will answer about the take rates. So our two main businesses which create revenues for us is airlines and hotels.
Yes.
Airline obviously is a low margin business,
Yeah.
but as a B2B, as an intermediary, we get 2.6% as a take rate commission, which comes from the airline. And typically our gross margin or net retention margin is about 1.3, 1.4%. And the balance is given back to the travel agents. On the hotel, it's a little different. There is no commission. We generally get a rate which we market up. Our take rates are about 8%. And our net retention margin is 5.5, which is something which is our bottom line. And therefore, if you see, the business in the last few years have actually skewed towards the hotel business. And therefore, our profitability is much more healthier because obviously, for obvious reasons, as hotels is a higher margin business.
Okay, all right, gentlemen. It's a short but effective chat. We've given our viewers a sense about the company. We look forward to chatting up with you all post the IPO. For the time being, we wish you all the best.
Thank you.
Post-listing, we'll have longer conversations.
Thank you so much.
This one's just a tease. Post the IPO, there'll be a bit of a squeeze. We'll try and squeeze out a few more numbers.
Look forward.
Thanks,
Look forward. Thank you so much. Thank you.
We are ready for it.
Well, for the time being, we'll slip into a short break. Come back. We'll continue our focus on markets and stock-specific action.
Welcome back. You're watching us here on Chartbusters. As you can see at the top of your screen, the market's still under a bit of pressure, but the Nifty is a little above that 22,200 mark once again. The Nifty banks the one which has seen a bit of recovery from down about 0.9% to a cut of 0.7%. The mid-caps faring a little better in the sense that it's not falling as much. We'll wait by for the remainder of the day to see how things progress. With that, it's time out on Chartbusters from Nigel and me. Thank you for watching.